Well, what's up, market mavens? Big Money Mike is back in your ears, ready to break down the markets with a fresh cup of insight and maybe a little bit of that caffeinated optimism you crave. Welcome to another episode of the Market Mindset Podcast, where we turn the chaos of the market into actionable intel that keeps you ahead of the curve. Let's get right into it, because the tape is moving, and so are we. There's a lot to chew on today, so let's start with the big picture. The market got a jolt of confidence and a double shot of espresso after President Trump decided to postpone those looming 50% tariffs on goods from the European Union. That was enough to send the indices soaring, with the S&P 500 up 2%, the Nasdaq jumping even higher, and the Dow Industrials gaining about 400 points. Investors clearly needed a reason to breathe easy, and for at least a few hours, they got it. Consumer confidence numbers also helped, with the Conference Board Index bouncing sharply higher in May after 5 straight months of decline. The message? The market hates uncertainty, especially when it comes to trade, and any sign of detente, or at least a timeout, gets people buying. But let's talk about where the action was really happening. The entertainment and media sector was a star today. Disney shares popped after its live-action Lilo and Stitch smashed box office records, pulling in $183 million over the long weekend in the US and Canada, and over $314 million globally. That's the biggest Memorial Day opening ever, and it's a real flex for Disney, especially with its stock still well below its old highs. Analysts are already saying this is a sign Disney's creative juices are flowing again, and that the company's franchises still pack a punch. The ripple effect sent movie theater stocks soaring, with AMC up more than 23%, Cinemark up nearly 4%, and Marcus Corporation up 10%. It's rare to see this sector get this much love at once, but after a rough few years, maybe the big screen is back. Another sector heating up is healthcare, thanks to some buyout chatter. Hologic, the medical technology company, jumped over 15% after reports that private equity firms TPG and Blackstone made an offer to buy the company for around $70 to $72 per share, a 30% premium to the prior day's close. Even though Hologic reportedly rejected the offer, the stock held on to most of its gains. Why? Because the market thinks there could be more suitors at the door, or at least more talks about a deal. When private equity starts circling, you know there's value to unlock. Over in biotech, Rocket Pharmaceuticals took a hit after the FDA paused a trial of its gene therapy treatment for Danon disease following a patient death. The stock dropped sharply, and that's a tough pill to swallow for anyone holding it. On the flip side, Rocket Lab, the space systems and launch company, was in the news for a positive reason. It's acquiring Geost, an Arizona-based firm specializing in advanced electro-optical and infrared payloads for national security satellites. The acquisition is valued at $275 million, plus up to $50 million in earnouts, and it's a big step for Rocket Lab as it tries to offer more end-to-end solutions for government and commercial missions. The stock popped on the news, and space remains one of the most exciting, albeit volatile, corners of the market. Now, let's talk about some tech and AI plays. SoundHound AI shares were on a wild ride, surging as much as 16% after Piper Sandler initiated coverage with an overweight rating and a $12 price target. The analyst called SoundHound a direct play on the AI revolution, thanks to its advanced voice AI platform that's expanding into automotive, restaurants, and customer service. The company is shifting more of its revenue to subscriptions, projected to make up 90% of its sales in a few years, which could be a game changer for its profitability. But it's not all smooth sailing. SoundHound is facing a class action lawsuit over allegations it misled investors about its financial controls. Still, the stock is volatile, and today it was all about the bullish initiation. On the flip side, Fair Isaac, the company behind the FICO credit score, tanked again. Shares are down about 30% over the past 5 sessions, after the head of the Federal Housing Finance Agency raised concerns about its pricing and endorsed cheaper alternatives. It's a classic case of regulatory risk hitting a stock, and it's a reminder that even solid companies can get blindsided when the government starts talking policy. Now, let's turn to the international stage, where some of the most exciting developments are happening in the autonomous driving space. Pony.ai, the Chinese autonomous driving company that's publicly traded on the Nasdaq, just announced a major deal to deploy its robotaxi fleet in Dubai. This partnership with Dubai's Roads and Transport Authority is a cornerstone of the city's 2030 Smart City Vision, which aims to convert 25% of all city journeys to autonomous trips by that year. Pony.ai will start with supervised trials in 2025 and move to fully driverless operations by 2026. This is a huge win for Pony.ai, which is already a leader in robotaxi services across China, and it's a sign that the company is serious about global expansion. The news sent the stock higher, and it's definitely one to watch as the world moves closer to a future where self-driving cars are the norm. Not to be outdone, WeRide, another Chinese autonomous driving company, is expanding aggressively into Saudi Arabia. It's launching robotaxi and robobus services in cities like Riyadh and Al Ula, with plans to integrate with Uber and other ride-hailing platforms later this year. WeRide already has a strong presence in the UAE, and its expansion into Saudi Arabia is part of that country's Vision 2030 plan to build smart, sustainable cities. The company is also rolling out autonomous sanitation vehicles, like the RoboSweeper S1, at major medical complexes, which is a clever move into a high-visibility niche. The global race for autonomous mobility is heating up, and both Pony.ai and WeRide are making big moves in the Middle East. But not all international news is good news. PDD Holdings, the parent company of Temu and Pinduoduo, saw its stock take a big hit after reporting first-quarter results that missed expectations by a wide margin. Revenue grew just 10%, its slowest pace in 3 years, and net profit fell 47%. The culprit? Rising tariffs and increased merchant support that weighed on profitability. The company is facing headwinds both at home and abroad, as the U.S. and China continue to spar over trade. It's a reminder that even the fastest-growing companies can hit a wall when the political winds shift. Meanwhile, over in the world of crypto and media, Trump Media announced plans to raise $2.5 billion to build a Bitcoin treasury, one of the largest ever for a public company. The deal, which is expected to close soon, will put Bitcoin on Trump Media's balance sheet alongside cash and other investments. The company says this is part of its strategy to become a diversified holding company, and it's a sign of just how far crypto has come into the mainstream. Whether this move pays off is anyone's guess, but it's certainly making headlines. So what's my hot stock pick for today? Given all the momentum in the autonomous driving sector, I'm locking in on Pony.ai. The Dubai deal is a game-changer, positioning the company for global leadership in robotaxis. With supervised trials starting this year and full driverless operations planned for 2026, Pony.ai is at the forefront of a massive shift in urban mobility. Plus, the stock got a nice bump on the news, but I think there's more room to run as the company executes on its global expansion. 2-4. As for the market tomorrow, I expect a pullback after today's big rally. The S&P 500 is likely to give back some of its gains and settle down around 5,250. The Dow Jones could lose a couple hundred points and drop back toward 38,500, while the Nasdaq may dip a bit but stay above 16,500. It's a classic case of buy the rumor, sell the fact, especially with so much focus on trade and tariffs. All right, that's all for today's episode. Thanks for tuning in to the Market Mindset Podcast with yours truly, Big Money Mike. Stay sharp, stay curious, and I'll catch you on the next trade.